Have you ever looked at the US national debt, now over $37 trillion, and thought, how on earth can they ever pay that off? It's a mind-boggling number, a figure so large it's hard to even comprehend. But what if there was a radical, almost science fiction-like solution? What if the answer lies in Bitcoin? It sounds crazy, right? The idea that a decentralized digital currency could solve the financial woes of the world's largest economy. But this isn't just some late-night crypto forum fantasy. It's a bold plan that's being discussed by some very serious people, including tech moguls, economists, and even political candidates. So today, we're going to dive deep into this fascinating idea. We'll explore exactly how this plan would work, what the potential upsides are, and the massive risks involved. Could Bitcoin really be the silver bullet for America's debt crisis? Or is it a recipe for financial disaster? Stick around, because we're about to unpack one of the most audacious economic proposals of our time. First, let's get the big picture. The US national debt is the total amount of money that the federal government has borrowed to cover its budget deficits over the years. Think of it like the country's credit card balance. It currently stands at an eye-watering $37 trillion and is growing by about $1 trillion every 100 days. To put that in perspective, if you spent $1 million every single day, it would take you over 100,000 years to spend $37 trillion. This massive debt has real-world consequences. The government has to pay interest on this debt, which is now one of its largest expenses, crowding out spending on things like infrastructure, education, and healthcare. It also creates uncertainty in the global financial system, as the US dollar is the world's reserve currency. So, the problem is huge, and traditional solutions like raising taxes or cutting spending are politically difficult and often not enough. This is where the Bitcoin plan comes in. The core idea is surprisingly simple, at least on the surface. The US government would start buying Bitcoin, a lot of Bitcoin. The proponents of this plan, sometimes called the Bitcoin Treasury strategy, suggest that the US government should allocate a small portion of its assets to purchase Bitcoin and hold it on its balance sheet, just like it holds gold. Why Bitcoin? Because its supply is capped at 21 million coins, making it a scarce, digital asset, often referred to as digital gold. The theory is that as more individuals, corporations, and even other countries adopt Bitcoin, its value will skyrocket due to its limited supply and increasing demand. This increase in value, this appreciation, is the key to the whole strategy. Let's break down the math, and don't worry, we'll keep it simple. Imagine the US government decides to buy, say, $1 trillion worth of Bitcoin. At today's prices, that would get them a significant chunk of all the Bitcoin in existence. Now let's fast forward. Proponents argue that over the next decade or two, the price of a single Bitcoin could reach $1 million, $5 million, or even $10 million. These aren't just random numbers. They're based on models that predict Bitcoin capturing a percentage of the global store of value market, which is currently dominated by assets like gold, real estate, and government bonds, a market worth hundreds of trillions of dollars. If these price predictions come true, that initial $1 trillion investment could grow to $20, $50, or even $100 trillion. Suddenly, that $37 trillion debt doesn't look so insurmountable. The government could then sell a portion of its appreciated Bitcoin holdings to pay off the entire national debt, with plenty left over. This strategy has been championed by figures in the tech and crypto world, like Michael Saylor, the founder of MicroStrategy. His company famously adopted a similar strategy, converting its cash reserves into Bitcoin, and has seen its investment grow substantially. He argues that fiat currencies like the US dollar are constantly losing value due to inflation, while hard assets like Bitcoin are designed to preserve and grow value over time. Political figures have also started to take notice. Some presidential candidates have openly discussed the idea of backing the US dollar with a basket of hard assets, including Bitcoin, to stabilize its value and restore fiscal discipline. They see it as a way to escape the endless cycle of debt and money printing. The idea is to transform the nation's balance sheet from one based on ever-expanding debt to one based on a pristine, appreciating asset. So what are the potential upsides? The most obvious, of course, is the complete elimination of the national debt. This would be a historic achievement, freeing up trillions of dollars in future government budgets. Interest payments, which are projected to become the largest single government expenditure, would vanish. This would allow for massive investments in American infrastructure, technology, and social programs, or even significant tax cuts for everyone. Beyond just paying off the debt, this move would fundamentally reshape the global financial order. The United States would become the single largest holder of the world's premier digital asset. This would solidify its economic leadership for the 21st century, not through military might or traditional banking, but through technological and financial foresight. It would anchor the US dollar to a hard asset, potentially curbing inflation and creating a more stable economic environment for generations to come. It's a vision of a financially secure America, powered by digital gold. But before we all get too excited and start planning how to spend the surplus, we need to talk about the risks, and the risks are enormous. The single biggest one is volatility. Bitcoin's price is famously unstable. It can swing wildly, gaining or losing 20% or more in a single day. Imagine the US government's balance sheet fluctuating by trillions of dollars from one day to the next. The resulting economic uncertainty could be catastrophic. What if the US buys $1 trillion worth of Bitcoin and then the price crashes by 80%, as it has done several times in its history? The government would have turned a massive debt problem into an even bigger one, vaporizing taxpayer money in the process. The political fallout would be immense. Then there's the issue of execution. How would the government even buy that much Bitcoin without causing the price to go parabolic instantly, making its own purchases more expensive? It would be the largest market order in history. It could completely distort the market, pricing out regular investors and centralizing control in the hands of the government. The very thing Bitcoin was designed to prevent. Security is another massive hurdle. We're talking about securing potentially trillions of dollars in digital assets. While Bitcoin's network itself is very secure, the keys to the wallet holding the coins are a single point of failure. A hack, or even a simple mistake, could lead to the irreversible loss of a nation's treasury. Government agencies are not exactly known for their flawless cybersecurity track record. And let's consider the global geopolitical implications. If the US starts cornering the Bitcoin market, how would other countries react? Nations like China and Russia would likely see it as an act of economic warfare. They might try to ban Bitcoin, attack the network, or accelerate their own plans for central bank digital currencies to compete. This could trigger a global digital currency arms race, fragmenting the international financial system and creating new geopolitical tensions. Instead of creating stability, it could lead to chaos. The move would also be a massive gamble on a single technology. What if a flaw is discovered in Bitcoin's code? What if a better digital currency emerges? What if quantum computing breaks its encryption? While many experts believe these risks are low, they are not zero. And when you're betting the entire economy, even a low probability risk of total failure is a terrifying prospect. So, where does that leave us? The idea of using Bitcoin to pay off the US national debt is the ultimate high-risk, high-reward proposition. On one hand, it offers a tantalizingly simple solution to one of the most complex and persistent problems facing the country. It presents a vision of a future free from the crushing weight of debt, with a strong, stable currency and renewed economic leadership. It's a bold, forward-thinking plan that embraces the technological revolution of our time. On the other hand, it is a monumental gamble. It bets the entire financial stability of the nation and arguably the world on a volatile, relatively new asset. A misstep could lead to an economic depression that would make 2008 look like a minor blip. The path is filled with technical, security, and geopolitical landmines that could detonate at any moment. Ultimately, whether this plan is genius or madness depends entirely on your perspective on Bitcoin itself and your appetite for risk. Is Bitcoin a fleeting speculative bubble, or is it the future of money? Is the US government capable of managing such a radical and complex strategy? These are the trillion-dollar questions. For now, the Bitcoin treasury strategy remains a fascinating and provocative thought experiment. It forces us to think outside the box about debt, money, and the future of our economy. While it's unlikely the US Treasury will be adding Bitcoin to its shopping cart tomorrow, the conversation itself is incredibly important. As the national debt continues to spiral, we may find ourselves needing to consider ever more unconventional solutions. What do you think? Is this a crazy idea or a stroke of genius? Let me know your thoughts in the comments below. Thanks for watching, and if you enjoyed this deep dive, make sure to like, subscribe, and hit that notification bell for more content.